Morning, everybody. You guys doing well? Today we're looking at NASDAQ as per usual. I sent out the daily bias going into the morning. Staying flexible today. We have 8:30 news. We have 10 a.m. news as well. Orange folder. So I'm 100% fine with flipping, unlike I was yesterday. A little bit more flexibility given we have news, given it's Thursday. A little recap if you didn't read the daily bias. We had NVIDIA news coming out in the PM session after FOMC. This kind of weird continuation going into Asian, I just see as kind of this real move for the day. Real move from FOMC, real move from NVIDIA earnings. By the way, typically NVIDIA earnings is any earnings I really just don't care about. And this post-market move is not something to be scared about. It's just kind of annoying. When I saw it going on yesterday for my review, anytime you see this large opening range or not opening range, but large pump up in the post market or pre market, whatever you want to call it, sometimes it just makes the morning session annoying, like just as scalpy or choppy. So I just get annoyed more than anything, to be honest, because it's like sometimes you just don't get a move in the morning. But nonetheless, we have this dealing range there. I've marked out the daily inefficiency, which was our target for yesterday, right? And target for the week obviously ran up and tagged into, and now we're dropping currently into discount. That's that 1 hour IRL you see marked out there, which is discount between the swing low formed from yesterday to the swing high formed up here. We do have a slight SMT up here. I was slightly bullish going into the morning. I like the minor buy side here, original consolidation, and even if we were to be bearish, I would like it to first run out that buy side and then come back down and sweep the sell side. If we drop through this gap, and obviously we don't have any run above right at 930, to me that makes it extremely bearish, and we're going to look for even the sell side down here as a potential target. Obviously, depending on how we react to this gap, and if we can close back through, then I may look for premium buy side, which would be the London high in this case, or even this high. But I mean, based on what it's giving right now, it's decently bearish. There was no, I mean, if you look at the current profile, right, we have midnight opening price marked out here. We have run above the Asian high. There's no SMT on the Asian high. If I cycle these timeframes, you'll see Asian high ran out there, Asian high ran out there, YM, Asian high is also ran out right there. But we do have SMT between these highs here. But look at the daily profile just right now of it sweeps the buy side, drops back down, fills in efficiency, and then we just leave a bunch of breakaway gaps open, right? There's no real retracement. After 7 a.m., from 7 a.m. onwards, it does not come back into premium and then drop off. It doesn't come back and take any other buy side and drop off. There's no short-term SMT there. So it's very weak if we're looking for bearish prices. Now, the fact that we just dug up into this daily inefficiency leads me to believe that we're probably going to go back for sell side in some sense. And we have sell side down here from the earnings yesterday, which to me seems like a decent target for what we're looking for. I want to sneeze. Never mind. Obviously on the 1 hour chart, we have gaps. We didn't really have any gaps below that. So as we come down and dig into the order block here, 1500 order block that supports this efficiency as well as this breaker, if you will, this up closing candle here. I just want to see how we react to this IRL, basically. If we close through it and we are seeing the price action we're seeing now, if it just shallowly filling inefficiencies, dropping off aggressively, then I'll be looking for the sell side below. I'll mark it up over here, actually. If we get some reaction out of this and it's strong, I need a strong displacement as well, then I'll look for the London high. And if there's no trade, there's no trade. I'm not anticipating anything. Right, it's a good reminder that even though yesterday I didn't trade, and maybe some of you didn't either, do not expect that, okay, just because we got 1 day of no trade, then tomorrow you're owed something. You're not owed anything. Um, let the market do its own thing, and we are sitting here as an observer. I told you yesterday, you are to separate the days. Today is its own day. It doesn't matter what happened yesterday. It doesn't matter what's going on tomorrow. You have a job to do today. If you can just do the job today, you're fine, right? So manage risk, be smart in psychological aspects of it, take good trades, or maybe don't take a trade at all. We have to completely separate us from the past mistakes, our past maybe experiences, and just operate today as if it's a fresh day, which it is, right? So, um, like I said, don't think that just because you skip 1 day or something that you're gonna have some phenomenal day um, the next, right? And if it does give us that, then we'll take it. So we just tag consequent encroachment of the hourly gap. By the way, this would be the first presentation gap. I know there's some confusion around it. ICT has given a bunch of random rules for it. It's one of those PD arrays that if you mark it out incorrectly, it's not a big deal. At least for the way that I use it. I know ICT's 2025 mentorship, he's used the first presentation gaps a lot from like previous days as well, and like the new week opening gaps. He's using a lot of these like real gaps, like first presentation gap, new week opening gap, new day opening gap, stuff like that. I don't really use that's not my approach. So first presentation gap is great, but it's not, if you mark it out incorrectly, it's not the end of the world. Okay, but per rules that he originally dropped, this cannot be the first presentation gap. As per the original rules, this is the 930 candle. So although this is an efficiency with pre-market, as we go over to RTH, there's no inefficiency there, right? There's it's missing for the first candle. Instead, you just have the new the opening range gap instead. So technically this would be the first inefficiency after RTH. So first presentation gap. All right, notice how weak we are, right? We're not even coming back and touching the order block. So I'm just monitoring right now. Let's go to 15 over here. 4-hour chart as well. If you pull up the 4-hour chart, we got huge BPR about to form. It's just dropping completely through that gap. And if we get that, then we may look for a be like a weekly retracement back into discount of that dealing range there. Let's go back to the daily here. We just tagged into this daily premium inefficiency paired with the bearish order block there. So it'd be reasonable to expect at least some retracement. I don't think it's going to come all the way back down and fill this breakaway gap or anything like that. But if it wants to come back even slightly into this daily bisi here, right there, you'll see that it may come back down into there, which is right below that sell side we had marked out. All right, so I was not confident going into 930 as to the directional price. I said in the daily bias, right? Would like to see 930 print, minor bias at a short-term target, blah, blah, blah. But 930 opening range will tell me what I need for bias determination for the rest of the session. Therefore, I cannot risk anything on a 930 setup. So this week, I've not taken any 930 trades. Last week, I may have taken 1 or 2. I don't even remember. Actually, I don't even think last week I took any. I'm trying to remember. So it's been macros all day, all week for me to this week and last week. And they've been serving me pretty well. So this week so far, I've only taken 1 trade. Obviously Monday was bank holiday, didn't touch it there. Tuesday, got that 7.3 R. Wednesday, no trade. Today, let's see. I posted, by the way, the market review from the 27th, the tape read from the 28th. Those are both available into the YouTube vids section, which you can find. If you just scroll up in the channel list, you'll see it up there. And obviously, if you have any questions, you can leave them there, or you can DM me personally. So we got inefficiency there, touching the bearish order block. And for the most part, get this last manipulation leg here from the 5-minute. I don't really like the 1-minute one because notice how this 1-minute high, low, higher, high is nested within this one here. So I would favor in this case to use this higher time frame manipulation leg. So that gives us a projection down to -2, -2.5, right into here as we are dropping into, and then -4, -4.5. And if this is one of those days where it just keeps dropping and there's no real entry, then so be it. But as we're tagging the discount end of this 1 hour gap, it should have some reaction back up, even if it comes back and retraces into that order block we just marked out. If it starts to just close through, then we're extremely, extremely bearish. So 5 minutes till the macro time as well. Now, the 8:30 news really didn't do much. Normally we look for, the news drivers and really the volatility injections to be 8:30, 9:30, 10, right? And normally we look for manipulation and expansion, kind of, and retracement sort of thrown in there as well. So if 8:30 manipulates, 9:30 should expand. Sometimes you get 8:30 manipulation, 9:30 retracement, 10 a.m. expand. Normally what you see on a day-to-day basis, despite the news, is preferably 9:30 reverses or manipulates, 10 a.m. expands. In this case, 8:30 really doesn't do much in terms of either one. I mean, according to what we're seeing right now, you could see this as manipulation, but is it really manipulating? Is it taking stops? No. Is it digging into any 15-minute POI? No. Nor is it this huge candle that you normally see for manipulation. So it's very hard for me to look at that as a valid data point. Instead, my focus shifts to the 9:30. If this is then expanding down, the 10 a.m. obviously it's 10 a.m. orange folder, so it's not going to bring a huge volatility injection. But actually, let me double check. I'm going to see which one it is. Pending home sales month over month. I don't know. Is that one normally pretty volatile? It's listed as orange, and I'm not. Yeah, I don't know. Can you show your? Yeah. Got you. I'll screenshot it for you. Zoom in SMT on the lows. Where? Oh, right there. I see. Yarp. So there's your first 15-minute candle being printed, and the displacement itself kind of telling the story. Not really respecting any valid PD array there. Let's go back to the 4 hour. So 4 hour chart. Let's clear some of this up. It's a mess. My goodness. There you go. So like, look at the 4 hour, right? huge BPR about to form, especially when this candle closes in 10 minutes. So that sell side to me looks like a valid draw. I know we have this inefficiency here. But as we're digging into an IRL premium, short-term sell side seems like the draw. So here's macro time. We got news coming in at 10. Now price is expanding. So when price is expanding, the PD rate you normally look for is an order block to get an entry off of. You don't really need a premium retracement. You don't really need a breaker in that case, but it is definitely higher risk in the sense of if you do get in on an order block on demo, you then run the risk of if it does retrace after, does have some even short-term run on stops on the buy side, you're then stopped out, and then it creates the real move. So if you get on an order block, high probability order block preferred, you run that risk, right? And it's either you get really, really good entry and it just runs right here, take profit, or you're kind of stuck with getting stopped out before order flow really is invalidated sometimes. And then either you're left with a losing trade towards the right direction, or you have to go in and take a second trade, which normally most people, I don't suggest you want to be taking more than 2 trades. The more you can focus on a one shot, one kill per day is the best, I think, because it forces you to, one, take really, really good trades, and number two, to actually deal with the outcome, right? If you take a losing trade and immediately we're taking a winning trade right after that, sometimes that's a coping mechanism, which is immediately we just trade the next thing, even if it's not good, and then it produces a win, and then we sometimes forget the fact that our first real trade was a winner. So normally when it's not something that my bias isn't in that direction in the first place, I'm not going to trade order blocks in that direction. I'd favor for run and stop, something to give me what I want. Now, if we get a turtle soup opportunity, I'll swing high there, so I'll be monitoring it. We got this inefficiency here. Macro time as well. So it's digging up into the lower portion of that 1 hour gap. Don't forget that. And the 1 minute inefficiency here. So it's fine if it overshoots this 1 minute inefficiency. There's no problem with that. I do want to see, is that a 2 minute gap? No, it's not a 2 minute gap. Okay. This right here would be an intermediate term high technically, right? Although it may be in discount of the short-term dealing range, fills a gap, and then we have a short-term high after that. So this would be an intermediate term high, meaning if we do displace through that's high, look at that as almost a true market structure shift. Doesn't mean immediately look for longs, but it's now an indication of bullish price action. So as long as we hold this inefficiency and we've got a short-term SMT, which I don't see right now. Oh, there you go. What is that? This high? Every day I've taken more than 3 trades. I've either broken even or small profit or lost my mining account. Revenge trading. Yeah, exactly. I just don't. I normally will shoot for 1. There's very few times that I'll allow myself to take 2 if I really think that. It's normally if I got stopped out in the same direction. Like if I'm looking for longs, I get stopped out on the long and it's still a valid trade, and I really think we have room to run, then maybe the only time I'll take a second trade. Very rarely will, at least now, will get in a long, flip my bearish, get into short. Normally at that point, I'm just turning the charts off. And yeah, the third trade, normally you're not nearly as, I just simply don't think you'll get 3 high quality setups in a session if you have a strict model. Unless you're using multiple different models and you have a really good understanding of the market, you're just simply not going to have 3, if you're trading a unicorn, you're not going to get 3 unicorns on the 1 minute in a session. Simple as that. Or at least high quality ones. You may get a sys-D, but then there's going to be no gap. You know what I'm saying? So digging right perfectly into that -2, -2.5 there. And this area, if you're wondering, is normally used for our retracement / reversal right in here. So -2, -2.5 standard deviation target retracement / reversal. So we see offering a retracement in there. So remember, retracements are not random. They happen after a premium or discount array has been tagged. So it's not just going to randomly trade back into the range. When you look at a market maker model in here, right, all of these premium arrays will cause discount retracements or some sort of entry point. So this one in here, this one in here, that's when it's starting the retracement. Or as soon as it runs out that premium array, a low-hanging fruit drops back into discount, either offers an entry or sometimes it comes back down and reverses, back down to here or something. You got a 5-minute gap over here too. Are you still bearish? Yeah, for the most part. I want to see how we react during this macro time for sure, but we got short-term SMT between these highs. If on the 5-minute, we got a 5-minute gap, displace it through that gap, we're seeing the kind of same signature we saw on Tuesday, right? Inversion gap at the lows, average tagging and discount PD rate. But at the same time, look at the 1-hour chart. It's tagging to the bull short block there, right? Like I said in the morning with the inefficiency. So I want to see how we react to this inefficiency and how this candle closes. It's still, for me, for it to drop this far into discount with these gaps forming, it's going to be hard to go long into that. So I'm probably just going to be scalping today, if anything, just looking for entry, exit, not trying to get an entire daily or session move. If it offers me, that's great, but I'm perfectly fine with getting in, getting out. So it's respecting that 5-minute sibi on the left chart that you see there. Short-term SMT, I believe. Between the highs, yeah, ES there and NASDAQ there. Go to a 15-second chart. My favorite, we can get one little retracement back in premium here. Moving into this down closing candle. 31. Yo, yum. What's up, my man? Right now, it's a classic retraction. The amount is dropping pretty heavily. Looks like it's expanding, so I would say it's a classic retraction. $21. Yeah, I'm looking at PM lows as well. So retrace back into the high, low, higher high there. Inefficiency on the 15-second chart. So at this point, I'd like to see it drop now and take that swing low. I feel like this retracement is over. We had the short-term SMT between the 1-minute chart, these highs here during the macro time with ES. So if we can start to drop now and take out this swing low and obviously displace through that swing low, then we have the sell side down here as a short-term target. U of M at 10 is on Friday. So today we have consumer month-over-month housing sales or something like that. Forex sector not working for some reason. Here's your month-over-month housing sales. So I like to see it drop a little bit, and I want to take out that swing low. If it takes out that swing low, we should be good for bearish price action going the rest of the session. If not, then I'm Gucci for the day. It's having some trouble even taking out that swing low. There you go. So I want it to drop in speed through here, if we can. Dotted line. How are you looking to enter? Yeah, that 15 second inefficiency here was decent. As well as the SysD down there, decent. But confirmation of that trade would be displacement through this inefficiency. Or sorry, through this swing low. If you don't get that, then I'm probably not going to look for a continuation and be stopped out. Dun, 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 dun. So you can see the volatility that whole month-over-month housing sales brings is really nothing compared to the U of M sentiment that we'll get tomorrow. If you get speed, are you going to market execute? No, I don't think I'm going to take a demo trade on stream today, but that would be one way you could look at it. I like the inefficiency more than the market execute on the swing low, or even the SysD here. But we're spending a little bit too much time in this gap for me to like it. It needs to just, it's staying too much in here. Like I wanted to just, if it ran up here, tag this and drop down, that's great. But to me, it's spending way too much time inside the gap for me to stay within the trade. What do you need to switch for buys? 5-minute inefficiency being traded through with displacement. And then, yeah, you need like supporting order flow heavily. So 1-minute gap in here. You can see that. Slight retracing the premium. So retraces into the 1-minute gap. You have a SysD now through this swing low. If it even can tag this out, that's a SysD. So now you look for it to drop down, take out the swing low. Especially if there's SMT there. There's no SMT. Yeah, no. None. So our premium gap traded into. Look for it to drop now, take it that swing low. I want to see a gap form on top of that swing low. So if you have an inefficiency formed here, drops, retraces back into it. I don't know why it's staying within this range, though. It should not be staying continuously within here. I know we have this gap, but that shouldn't cause too much problems for price. Takes out the swing low. I would not look for buys anymore. But I'm obviously looking for shorts, so. There you go. So there's your gap forming on top of that swing low. I'd like for it to close below it now. And you get the sell side as target. So you see the displacement through that speed. It's got to be random, right? Got to be random. Now, sell side is the only real target for the rest of the session, as well as the draw on time. If you want to use that. We know for our session basis, we're looking for 1030 as our minimum. But at this point, I'm not bullish at all. Beautiful and remorseful. Oh my goodness. I love it. Super clean. What even was that? Let me look back. We're up. So you got a draw on liquidity down there at 21,320 or so. And then you've got the draw on time, which is 1030. So both axes now have a target. Kind of just sit back and relax and just watch through. Yeah, for sure. Yeah, when price displaces through -2, -2.5, can that be used as additional confirmation of draw on liquidity? Correct. Yeah, so when you displace through there, you look for -4, -4.5, right? And obviously the sell side below us. So unfortunately, I got stopped out there. I'll show you. I'm not going to show you the execution, but on my trade, the one that I just marked out here, I got in here on the SysD. So we're tracing into there. We had a short-term SMT back into the breaker, tags that with the inefficiency on the 15-second, drops back down, forms a SysD. So my entry was there on the SysD. Stop at the retracement high right here. And then entry or the exit down was down here. So a 9.07 trade, but I got stopped out. What could I do better? So a couple things. We did have the SMT up here, so I should have placed my stop at the SMT protected high. Got a little bit too greedy, I think, with the entry and the exit. I do identify the 1 minute inefficiency being traded up into here, which is reasonable, but even looking back at it, the amount of time it's spent in here and it has to come back up, fill the gap, and then drop down. I should have seen that, but would I have taken this entry probably another 7 times out of 10, 6 times out of 10? Trying to think. I would have liked. I don't really like. I mean, there's a SysD there or here, so I could have marked in there and placed my stop here. Even if I got in here, I should have placed my stop there. Yeah, or just waited for the 1 minute retracement entry. But to be honest, I still think the 15-second SysD is fine. You see me use that entry many times, but it is what it is. We'll drop down to the sell side there and into 1030. But hey, what can you do? Actually, let me see if I can share that screenshot. I'll share it with you if you want to see it. But I'll put it in stream trades. And that'll do it for me today. I'm not gonna chase this move down. I missed my entry, got stopped out, even with the right direction. So it is what it is for me. Here is the execution if you want to see it. I'll put it into stream trades there. So going short there. Missed out my fill, or missed out. I just got stopped out on the little run up there into premium inefficiency and then drops back down. All good. So we got tiny inefficiency there on the 1 minute chart. No supporting order block, so it's fine if it shoots through that a little bit, comes back into these gaps. 15 second. We got an order block there on 15 second. So draw on time at 10:30. Obviously, the draw on liquidity is a little bit more important, just given how London high was formed up here. So you're not looking for it to keep going, keep going. What kind of real world stuff is this for going on? I have no idea. Who cares? I'm breaking with a small partial. I'm not get chasing numbers anymore. There you go. At this point, you'll just see it continue going down. Oh, I feel like 10:10 gives first TP and 10:30 DUT gives extended TP. Price can reverse instead of a trace before reaching. Yeah, 100%. Partial one here, right into time to the time and target and DOL. There you go. Yes, you've got 20 minutes. Notice also how from between 9:30 and right now, you've been dropping a lot. If that continues into 10:30, normally you'll see 10:30 to 11 consolidate, sweep the low, and then retrace back inside the range. So when you have an extended 9:30 to 10 of the clock range, normally then it comes back inside that dealing range and either back to premium or even back to TGIF of that extended range. Okay. So you do expect a little bit of consolidation normally with 8:30 news, right? The rule is you look for consolidation for about 20 to 30 minutes within the silver bullet hour. And that sometimes it can just be seen by how quickly we're dropping, right? We dropped here at 9:30, we dropped at 10 o'clock. I'm not saying it's an everyday thing, but given that we did 8:30 news, if that starts the clock, which didn't really here because there's no added volatility, it just kind of stays with the consolidation. Look for a little bit of consolidation, but not too much. So drawing liquidity and drawing time is king. So that takes over. Can you ask a question? Of course. That's what I'm here for. Now, for the guys who partialed, I'm not going to say it's the worst thing to do. You know, Nothing wrong with that. But make sure that the partialing is not, it's on some sort of PD rate, right? We got 15-minute gaps in here. That's fine to take partials on. But if you're partialing, make sure it's on some sort of liquidity pool or some sort of time basis or something, and not just because we're moving a great deal, right? It's very tempting to take partials just because we're moving into profit, and maybe you see the dollar amount, but it's not a problem, of course. But just be mindful that we're not trading the PNL and we're not trading the movement, we're trading the price. So price has specific things it's got to do. Just like for an entry, we got to get in at a specific point. For an exit, we got to get out at a specific point. There's no problem with taking partials in the beginning because it's just lifting the 5-pound weight, the 10-pound weight, the 15-pound weight until you get comfortable holding it for longer and longer. So there's no problem whatsoever. Paying the trader is fantastic, right? No problem. But for the future, just be honest with yourself of, if you're taking a partial because you're staring over here at the thing and it's going up a great deal, and then you're closing out to stop that pain, that's just something to be self-aware of. I'm not saying it's something to change, but it should be probably in the future. But just be self-aware of that, of if you're closing out because it's moving, and that is going to be seen on the other side too, where then if you're in a losing position, you're going to let it run more. It's the pain of basically, um, the pain of that win almost is almost too high, where you just want to close it out so you can secure the profits. And then when you're in a losing position, you let it run further than you want, or maybe you start moving your stop loss because um, it's going too far. Yeah. ICT gave a great kind of tip for that. If you feel like it's in profit and you're stressing about closing it out, you give it 2 minutes to rethink. You set a timer. If you still at the end of those 2 minutes, you still are like stressing about the trade, you close it out no matter what. But yeah, make sure it's on some sort of PD array that makes sense as to why it's an exit. Otherwise, you're going to skew your RR. Where if you have good models and a good trading idea, if you're taking the partial or even full pulling before it's actually hitting the estimated target, you're going to screw up your RR and your win rate. So just something to be mindful of. I'm not saying it's a huge problem. Just that's all. Is this the right time to put in a low? It can be. It's post 10 a.m. in a classic London protraction profile, so it can be. But we have not tagged the draw liquidity yet for what I'm looking for, right? IRL to ERL on the higher time frame. So were you bearish today? No, I was looking for slight bullish movement, at least for the half of the morning, to come back up and sweep this minor buy side I had marked out, at least at 9:30 to opening range. Then if it drops down after that, it was fine. But it was definitely more 50-50 for me coming into the morning, so I was flexible. Creed. Why do I not trust myself anymore? I feel like whenever I take a trade, I'm going to take a loss. What I should do, change that. Moreover, I feel after all this year, I wasted everything and lost my. Sorry to hear that, my man. I think it's, yeah, self-sabotage is a real thing. Obviously, with something like that, any sort of mental stress that comes into your life, obviously we can't control those things. The best thing you can do, to be honest, is just to walk away from trading for a little bit. Um, I ton of good traders do that. It's just a trait that you got to take care of yourself, right? Um, so it's you have to prioritize at this point in your career. I think prioritizing the psychology part of it and the mental side of it is probably the most important. You probably have enough technicals, right? You probably have enough technicals. It's not a technical problem. It's just simply, number one is to walk away, and if you need to focus on yourself, if you need to focus on um, getting your mental health and your physical health back up to where it needs to be, that's the main priority, right? Trading is great, but if you're not doing well, then trading means nothing, right? What is a man like? What are you going to gain the whole world for if you lose your soul, type of thing? So prioritize your own health, prioritize your own mental health as well. Then come back to trading when you feel heavy or when you feel good. Second is to, yeah, like Andre Marshall said, it's all trading is all about belief system. So if you believe that you are a losing trader, you're gonna find that your actions and your the information that you perceive around the world is going to be the fact that you are a losing trader. I hate when people on YouTube post. It's a catchy title, but when you see people going like day 45 of being an unprofitable trader, you're literally labeling yourself as an unprofitable trader, and your actions are going to follow what you believe, right? So change the way you believe, change the way you think. And to be honest, it's a lot of self-programming sometimes when you're struggling, and it seems mundane, it seems monotonous of doing simple tasks, but literally writing in your journal when you wake up and you go to sleep, reminders of who you are. I am blank. I am blank. I am blank. I am a profitable trader, even if you aren't. I am process focused. I am disciplined. I am this, this, this. You write those down morning and night when you wake up, when you go to sleep for 30 days straight, right? And especially like if you feel like you're losing a ton and you feel like, okay, my mental health, my physical health is where it needs to be, you come back to the chart and you simply just tape read it for 3 weeks, right? And if you truly want this to work, you will do that, right? You'll do whatever it takes. So if what it takes is you take 3 weeks off, you take 2 weeks off of just simply watching it and learning it and removing that fear, it's much easier to then to work in trading, right? Trading is one of those things where you simply cannot operate out of fear. You don't want a Navy SEAL operating out of fear, right? You want them to go into the compound and do what they need to be doing. Same thing with a firefighter, same thing with a police officer. All those people need to operate not out of fear. They may have those emotions rising up, right? It's a human emotion is normal. It's your reaction, it's your training going into it. We're the same way. We're a mental athlete, okay? Dealing with money, dealing with thousands of dollars going and coming is not easy, right? Why do you think 90% of people fail in this? So if you train your brain, that's the main thing, is just training your brain. Pick up books, learn more about yourself, right? I think a fantastic resource is the Disciplined Trader or the Mental Game of Trading. Both of those are probably the top two books I would suggest for psychology. Like if you really think about it, there's probably nothing new in psychology for trading, right? Like no YouTube video nowadays is probably going to do the amount of justice a book is that's written 10, 20 years ago, because these guys have figured it out. I don't think a 21-year-old on YouTube, even myself concluded, is going to have as much knowledge as any of those guys. So I'll always point you towards my mentors and the people that helped me. So The Disciplined Trader, probably the best book in my opinion. Number two would be The Mental Game of Trading. I have the Mental Game of Trading copy PDF. If you want that, I'll send it. You didn't get it from me. This is just hypothetically on demo. The PDF is here. If I can find it, or if someone has it, if you can send it over. I'm probably not going to be able to find it. Oh, I got it. Boom. So you can read this. You can read the, thank you, Slender. There's your Disciplined Trader. Yeah, Trading in the Zone is also another Mark Douglas book that's fantastic in this mental game of trading. So prioritize and just absorb as much mental content as you can, and don't get it from YouTube. Don't get it from real resources. Obviously, I have psychology videos up on YouTube. If you want to watch those, they're great in my opinion. They probably have helped some, but that's the way you need to focus on. So it's really, majority of it is just, if you want to be good at trading, you must not operate out of fear. That's the main thing. It's obviously you want to be process focused. Obviously you want to not care about the outcomes. Obviously you want to um, be disciplined, things like that. But that all comes from, number one, not being scared. If you're scared about their model, if you're scared about the market, if you're scared about yourself, you don't trust yourself, none of those things will be possible. And if you operate out of abundance as well. So focus on that, then go back and focus on the technical side. I think if you've, yeah, I'm pretty sure you watched all the core content. I know we've talked before. So you've got the technicals probably down. It's just sometimes cluttered and thrown in the back of the mind where you got a bunch of other stuff to deal with. All right, so hopefully that helps. So we're approaching 10:30 here. It's 10:24. We got about 6 minutes left. Obviously, time is not everything. You need a combination of both. We got sell side still down here from the 1 hour chart as the current draw. Yeah, that Randall Howell guy is also pretty solid. The old heads all got it. They all got good information. Shout out the unks. Was told another mentor they take partials at 20 points. True, true. At the start of my career, if you go back and you watch my old live streams, that's all I did. I was just literally just trading the macro, getting in. This is when the volatility was much lower, like a couple of years ago. I would get in, I would literally target take profit of 20 points or 40 points, and that's it. At this point in my career, taking something off at 20 points, 40 points, these kind of concrete point-based targets is just, it's not what I like. And like I said, it skews up your RR. So if I'm getting in with what, like, so let's say 2 contracts, and my take profit is sell side there, draw on time, and it's maybe 200 points away, let's say, right? I'm not focused on that dollar amount. I'm not focused on the point amount of how far it is. I just wanted to get to that limit order. So if I take one off at 20 points, sure, I'm paying the trader. But for me, if I take the partial there, I'm going to skew up my RR. I'm going to skew up potentially my win rate, especially if I trim my stop to break even after that point. Because if I take 20 points and get to break even, and then it goes to my take profit, I'm not really trading my model. It seems, at least to me, if that's not your strict model, it's a little bit of operating out of fear, of the fear of almost fear of success or fear of failure. But obviously every model is different and everyone's preference is different. So at this point, it's not something that I would advise to do. Obviously, I'm not a financial advisor. I'm just saying for demo purposes, it's not something that I would do. Especially with given the volatility. Like this move itself is 65 points, right? Like, so taking a partial here, you got one candle. Like one candle is going to do that for you. And then to move to break even or to trim stop, it's not going to be advisable for getting larger runs and getting good movements, if that makes any sense. Yeah, I feel that, Average Joe. It's tough. If your DOT is reached but your DOL is not, what do you do? So normally I'll hold it towards the draw because draw is, it's still useful. There's very few times that I'll close out just because it hits 10:30 or whatever it may be, unless it's number one, low probability conditions, or number two, it is a partial runner, like a runner that I'm taking. If you go back and look at the trade I took on Tuesday, the very last runner I took, it was mostly time focused, not as much price focused. It was digging up into that hourly imbalance that I was looking at. But it was more the fact that, okay, right, it hit noon, I'm closing one out, or closing my last runner out. So that's like on the far end of the trade, obviously. But if I'm in a trade and I'm shooting for time only, it's probably because I'm focused more on it being a low probability day. But 9 times out of 10, I want there to be at least some sort of 15-minute PD rate it's tagging into at the same time it's running into that time of day. So it's a combination of both. So we're trading back up into the 5-minute sibi. Should be one there, yeah. 5-minute sibi there. You get a 5-minute order block as well. So we're bouncing a little bit off that 15-minute gap. I do still think that sell side is target. Let's make sure the 4 hours looking good. I mean, we got the reclaimed. Oh yeah. Okay, so we didn't even come back down to the inefficient section. If it came down to this point and bounced, I'd be a little bit more worried, but to me, it's still going to drop a little bit. At least I'd favor it too. Mean threshold, the order block, yeah, 100%. Yeah, so the question was mean threshold of the 5-minute OB be point of invalidation for shorts. So we've got, if I clean some of this up here, what the heck? This order block here is what I look to see as a high probability order block for two reasons. One, it came back up and filled this inefficiency and offered a shorting opportunity with SMT. Number two, we've got a gap here and a gap here that it's supporting. Therefore, this should be, when price is expanding, a high probability order block. If price then trades up into that, tags the low end, that's fine. We've got this gap here, which I'd prefer if it stayed within, to be honest. And this is left open as a breakaway gap. But if it crosses mean threshold of that bearish order block, that to me is a point of invalidation, where it's a little bit too bullish for me to be continuously looking for that sell side as a target. It's 10:30, by the way. So it's yeah, 100%. So you can either trim stop there, but like I said, even on the 5 minute, if you look, this gap here should be used as a breakaway, and then the sibi down here is a little bit better. So we'll have to watch and see. Now, technically, given the fact that London made the high here, the drawn time becomes earlier in the day to 10 a.m. Guys, in the PDF, you can go back and read the chapter about DOT, and it'll be in there, as well as doubling theory. But yeah, given the fact that this is still available and this is still here, I'd like for it to run down into this. Was in here last year, but I was so messed up seeing everyone else's success, I had to just get off all socials, crack down, and focus. Technically, I feel 100% confident. I have everything I need now. The last part is holding these trades and getting better entry and stop. Wouldn't have gotten here without you, Flux. Still watch all your YouTube. I appreciate that, my man. That's good to hear. I'm glad. Yeah, if any of you guys are still on social media for trading and stuff, I would get rid of it. To be honest, social media in general is just toxic. It's cancer for the brain. Get off of it. I don't have anything downloaded. The only thing I have downloaded on my phone is Discord in terms of social media. I got no Instagram. I got no TikTok. I got none of that. I got no Twitter. Best thing I've ever done. You get your time back. You stop rotting your brain. I don't even have YouTube on my phone. But yeah, trading social media is even more cancerous because of that exact reason. You see everyone else's success. Even if you don't say, oh, I don't compare myself, you're subconsciously going to pick that up. You're subconsciously going to see everyone pulling out 6-figure trades or whatever. It's just not, like, your argumentation may be, yeah, I know it's 20% bad for me and it's 80% good for me. Why are you even letting 20% negative into your brain? Right? Like, why is that the margin of error for, yeah, it's good, but there's a little bit of bad, but that's okay. No, just get rid of everything. You want 100%. Especially Twitter. Like, if you got Twitter and you're scrolling that for trading things, I know ICT posts on there. To be completely honest, he's off the rail. He's off the rails nowadays. So I don't think you're gonna be missing much. He's just rage baiting people to get them to do whatever. But yeah, exactly. So I don't think you're really gonna miss anything. And if you really think you are gonna miss something, you probably have shiny object syndrome. That's just being real. Yeah, exactly. Yeah. I was the same way. It's like, oh, there's actually there is good content. I'm not going to disagree. There's good content on Twitter. But the fact that it's a 20%, 80% split of, yeah, you get one good post every like 15 scrolls, it's just not beneficial. So delete social media. Stop being addicted to your phone, right? The whole point of trading was to get freedom. Meanwhile, we're over here addicted to our phones and we don't have freedom. So I'm just being real. Just delete it. I know everyone talks about it. It's true, right? Yeah, I know. I got a low key. I might as well get a flip phone. Maybe I'm old. Yeah, so exactly. Successful traders, apps, and social media, flexing money is for kids. Yeah, I feel the same way. I'm not gonna lie. I just think it's weird. Like flexing that stuff to me, just you're lacking something. Like right, like if you need other people's validation for the things that you're doing, I get enough validation for myself of just seeing how much I've grown. Like to me, like knowing I've blown accounts, knowing I've failed payouts, knowing I've struggled and sacrificed all that stuff, to see my own success to me is enough. And knowing that I am enough for all this, I don't need other people to say good job and pat me on the back. Like it's just, you know what I'm saying? Obviously, it's great to share your wins and sharing payouts and things like that. That is fantastic. Don't get me wrong. And you should 100%. If it's your first payout, if it's your first whatever, you're doing well, share that. Okay, that's something to be shared. But I'm saying do not share like every single payout, every single. To me, that's a little weird. Just a little weird. That's my personal opinion, though, of course. So if I'm wrong, I'm wrong. Thankful I have amazing mentors to learn from: Flux, CJ Trades, Tremaine, and Market Maker. There you go. That's a good stack right there. Yeah, CJ Trades and MMT are fantastic guys. Tremaine Trades, I think I've seen some of his content before too. Yep, Creed, I took a loss too. I'm not gonna lie. There's a 9-1, and I got the 1. Long pre-market. Oh boy. Sometimes you get a flex on the broke boys. Oh yeah, that is true. In my mind, though, I'm already rich. You know, at this point in this day and age, the fact that you even want to be better is rich. Like, how many people do you see even in your own personal life that don't even want to be better? They don't even want to win. Like, they're so unwilling that they just like they accept the life of. So even if you're in this call right now and you're even making an effort in trading, you're already winning, right? And you know that. So long pre-market at the gap peep, it looked double bullish at the S&P at the lows. Which one? Oh, this one here. Wait, which one? Here at like 8 o'clock. 9:20. Oh, I see. I was looking for it too. I was long coming into the day. I had this manipulation leg marked out. I was looking to see if we can get soup here. With SMT, we had the SMT. It started to give me one candle, but then it just dropped, and I was like, yeah, nope. Same. Yep. I was looking for it. That's why I didn't stream until 9:33 or whatever it was. I was looking for that right there to see if I can get in. It didn't give me it. All right, start the stream up. But yeah, I took a loss on this. I'll show you the trade I took. This right here. Got in on the SysD, stop at the high. My take profit was down here. Why is this a 9.59 now? What the heck? Am I tweaking? What, wasn't it just a 9.09? Anyways. Maybe it's down here that I marked it up. I don't know. Where did I? Anyways, that was my trade. I got stopped out on the high as I ran up into the 1-minute gap. So I should have seen that, but should have, could have, would have, right? How can I improve? I'll journal this and make sure I improve on it. To be honest, the best way Mark Douglas is right. The best way you can lose is just forcing yourself to adapt. If you look at every loss as a way to improve your model, it's so easy to lose. Because I'm welcoming the loss. I'm like, obviously I don't want to lose and it's a little bit painful still, but you just welcome the loss. You're like, man, if I just lose enough times, I'm going to have a crazy model. Like, I'm collecting data. Exactly. Yeah. And in the past, let's see. Last week I took 2 losses. One was a 7R, one was an 8R. This week I took a loss, which would be this 9R. So I'm perfectly fine with those. Following the process. And all those trades as well were all correct in the direction. I just got stopped out early. So it's my stop loss is a little bit too tight on those, and I gotta adjust that. Potentially for the new weeks from is there a new walk from 2 weeks ago? Bro. I don't really care too much about it, but oh yeah. Following the process, not the outcome. Oh yeah. Video yesterday. What did I post yesterday? I don't even remember. Oh yeah. Got it. Yeah, those what's his name? I found his YouTube channel a couple months ago and I watched a couple of videos that they were pretty solid. I gotta watch those other ones you guys sent. On average, what's your stop loss size on a high probability day at the right time, less than 100 ticks? It's anywhere from 20 to, I want to say anywhere from like 20 to 50 points, given the volatility right now. 20 to 40 points. On average, it's around probably, yeah, let's say 20 to 50 points. Sometimes I get like a 40-point stop if it's really volatile, but normally no more than that. Like the one on Tuesday was what? The one on Tuesday was 9:30. Where's the 9:30 open? It was 13. It was 13 on Tuesday. So yeah, maybe I guess anywhere from 10 to 40 points. Cool, calm, collected. Yeah, I'm gonna watch that later for sure. I gotta go get my watch adjusted, and then I'll watch that video. Creed, I picked up another TSOT or TSO, whatever it's called. You probably like it. Nah, you got me all the way messed up. You think I was spending 13 bands on a watch? Hell no. No, it's a nice it's like a green dial. Hey, TSO is up there. I'm not gonna lie. Yeah, I saw it. I saw it when I was getting some. Oh, by the way, I'll be on vacation from next week from the 4th until the 12th. That does not mean I won't be streaming. I'm gonna bring I have my laptop. I'll see if I can stream through. I have a mic as well. I like those Rode mics, the like the puffy ball on the top. I have one of those. So I won't have my headset, but I'll bring that. So I'll try and stream on the on those cruising on a yacht. Close, but no, I'm going. I got family in Miami, so I'm staying in Miami. So if anyone was there, let's link up. And then we're boating over to the Bahamas. So I'll be there for a couple of days. And we'll have Wi-Fi at the Airbnb, so I'm gonna try and stream. Link with the Miami Space Degens. Yeah, no, thank you. So yeah, I'll stream. The one-on-one calls maybe a little shoddy, so we'll have to, if anyone's got a one-on-one call that week, we'll still do it. It just may be a little weird because I'll have a USB with all my files, so I'll send that over. But what was I talking about? I don't even know. We're consolidating here, and I lost my train. So here's your 30 minutes console. So we got 7 minutes till the last ditch. You want to see if there's any SMT with these highs as it runs up there, if it tags into it. Now the breakaway gap still, I would like to see it hold open. Let's see what ES is doing. ES looks a bit healthier. We got SMT on those short-term highs. Let's see if we can hold. Doing any fishing in the Bahamas? I think we will. We'll probably bring some. Maybe we'll do some IRL vlogs. I'm a little camera shy though, so I don't like doing a whole lot. Yeah, me and my cousins and my family. I ain't got nobody. One face pick of you gonna go triple plat in the Discord, bro. Hey, it's in the PDF gem section. You already know. I did those little. It is. I know. It's how big of a boat? Here, let me see if I can find a picture for you. So it kind of looks like this. I don't know if this is the same model. No, I'm just kidding. I'm just kidding. I'm kidding. I'm kidding. It's like a I'm kidding. Uh, I actually don't know what the series is called, but it's probably like a it's like a fishing. It's almost like an advanced fishing boat, I guess. You've got like a front seating area, a back seating area. You've got the middle part with the steering wheel and the gadgets and tech, and then you've got the kind of overhang part. It's probably like 30 feet, maybe 40 feet. I don't know. I'll send a picture. Oh, actually, I probably have a picture on my phone. I don't know what I'm talking about. SMT up here, by the way, is holding. It's a little bit. We got macro time, so it's fine if it runs that stop. You should rent a Lambo and totally sell out courses. I know, right? If you're going to pick up one future prop firm, which is the best, Top Step, I think, is the 100% best. And then probably MFFU is up there too, My Fund of Futures, as well as Tradeify. I've used all of them. Top Step by far is the best. Tradeify, they have the straight to funded things. I had really no problems with them, but it's definitely just expensive. Like it's like $400, $500 for one straight to funded account. And if you pick up a couple of them, it's you're rinsing your bank account. So, but yeah, I know, and it's like 20% for whatever, right? 20% consistency rule, which is just killer. Like it took me, I don't know, it took me 2 weeks to that one in December. If you saw that screenshot in December, the accounts that I ran up. I normally don't share that stuff, but those are the Tradeify accounts that I ran up. It was like, I'm not even gonna say it, but Top Step 100% the best. Do how to pass a combine video. I don't even know what to say. Like it's just like take your model, don't do anything stupid with your risk, and then you pass. Like you can pass in a week. If anyone's struggling with passing an eval, you can 100% pass it in a week. Obviously, that's not what your goal should be, but easily you can pass it within a week because if you manage your risk properly and you just take good trades, you can easily do it. Alpha futures. I haven't used alpha futures before. I know a bunch of people use them, but I haven't checked them out yet. A week is low key a limiting belief. Just do it in a day. That's true. Actually, you can't even do it in a day. You have to do it in 2 days. What's your risk percentage on evals? So on evals, it's obviously the percentage is kind of weird, but I'll take the risk amount. Let's say it's 3,000, right? I split it normally into around 7 to 10. For me personally, that works. For most people, I would say split it up into 10, 20, but I'll split it up, let's say into 10. So then my max risk per trade is about 300. And then it's, anywhere from 300 to let's say 600 if I'm really risking it. And then I'll take that. If I lose, it drops to in half. And then I'll have to take that half loss 2 to 3 times for them to drop again. And then that will be my lowest for the rest of it. I'm not going to keep dropping half. I've got about 3 risk sizes. And then obviously if I'm on a winning streak, I'll try and increase it by not double it, but I'll go up to maybe like 400 and then 500 and then consistently increasing risk until obviously managing it with my drawdown. So my drawdown is only 3,000. I don't really want to be going above 600. Like that's really pushing it. Even 600 itself is really pushing it. So I normally will take the total drawdown, split it into a number, And then if I take that loss there, I'll split it up into different numbers as well. So I took a loss today. So then tomorrow I'll take that original risk size and split it into half. And if I take a loss on Friday, I'll use that same risk size on Monday and Tuesday. If I take losses there, I'll drop it again going through the rest of the week, and I'll have to use, obviously the only time you can go back up is when you go back to your 50% or the equity high of the original loss. Do you still think 75-point rule from your trading like a business video is solid? Are you talking about like the for targets and things? Like target if it's just 100 points. With this volatility, no. Obviously you can make it work, but yeah, if you can shoot for 100 points a week, obviously don't shoot for targets in terms of monetary amount, but yeah, 100 points a week. Like if you do the math, you stack accounts, you're doing perfectly fine. Perfectly fine. Right? Like sometimes we forget how little it takes. Right? Like if you've got 3 accounts, right? And your risk is, let's say, $400, right? That is a $1,200 risk. And if say your average RR is 3R, right? That's $3,600 per trade, per winning trade. If you do that once a week, you're doing fine. Like that's perfectly fine. That's a livable amount for sure. Anywhere in the world is a livable amount. So sometimes we overinflate what needs to be done, and that alone can make us self-sabotage. So reduce risk, just take better trades, right? Our goal is not to increase risk, and you don't think that you have to take this huge risk trade to get a good win. Just find a better model or refine your model down. Like and the way you can refine your model down simply is finding, number one, obviously there's 2 ways to increase your take profit and increase your RR. Number one is to push your TP. Number 2 would be to reduce your stop loss. So you're going to take losses with both of these. It's just cost of doing business. Example for today, I took a loss today. Withdrawing liquidity being right, I probably would have break even today, given how much it's coming back into the breakaway gap. It didn't come back down and tag this sell side nor the -4. So you're going to take losses. Inherently, you have to take losses in order to get a refined version of this. And yeah, this is 100% the final steps. If you get in conclusion of this process, if you are able to push it to around a consistent 3+R, that is great, right? If you can get 3R on average, anything past that is more than enough. If you're shooting for around a 3R or a 4R plus, you will never need to increase it past that, given basically what I'm saying. Obviously there'll be different times where you'll get, obviously shooting for an RR itself is not practical, because if you're just shooting for a 3R, it's great for the math side of it. But when there's opportunity for you to take a 7R and you're just taking a 3, it's just going to be like, why do that? Right? So trade the price action, trade what's on the chart. Don't trade the RR, don't trade the stop loss. Obviously, if your model's giving you a 3R and if there's a 2 right there, take the 2. I wouldn't say trade anything less than a 2. So your goal for most people should be anywhere from a 2 to 4R on average winning trade, right? And that makes it so your win rate only needs to be anywhere from 40 to 20%, if I'm correct. Someone have that screenshot. Let's just send it out into here as our daily reminder. Yeah, 40% win rate is, sorry, a 4R win rate is less than a 20%. So 2R is about 33. So that cuts it really, really, you're more than winnable. And the only reason that you don't like this number right here is because of your ego. It's the only reason, right? If you think, oh, that's too small, it's because of your ego. You want to be winnable. You want to be, if you want to make money, right? Our goal is to make money. Our goal is not to be right. Our goal is not to be flashy. Our goal is not to have these crazy trades. Our goal is to freaking make money and get out. So if you don't like the fact that you can be profitable with a 40% win rate, that's just an honest truth, is your ego is just too high for your model. It's not necessarily a bad thing, I guess. Like, obviously you could still push for this, but at the end of the day, if you're taking 10K trades twice a week, I don't think you're going to care if it's a 40% win rate. Neither is anyone else, right? So, just be, you don't have to be perfect in this, right? You just have to be good enough, and everyone's good enough. So reduce your win rate, or reduce your win rate if you need to, and just focus on all you're focusing on is how you can trade and be a better trader today. That's it. So you're constantly just improving on yourself, and doing what you need to be doing. And eventually if you focus on being a winning trader, you'll win trades easily, right? Like, just focus on the process. And the process is, get a good trade. Don't take stupid trades. On the trades you lose, figure out how you can improve, what you did wrong, how you can improve for tomorrow. That's it. That way you lose, you're gaining something, and you're gaining awareness. You're gaining also a better model. When you don't take a trade, you're gaining and preserving mental capital. You're also preserving physical capital. And when you win, you're also gaining, obviously, everything else we talked about there. But when you follow your process, you fall in love with them. Got to get back to work. See ya. See you, Nick Nack. We'll see you hopefully tomorrow. But take care at work. Be safe. But when you come to that point of despair, almost, where you keep doing something stupid and you're like, yeah, I can't do this anymore. When you start sticking to your rules, you get so much, it's literally like pleasure almost. You get pleasure out of following your rules, because you'll know that you'll never get back to that pain of regret and pain of blowing an account. So we're digging up into mean threshold at this point. So if I would still in that winning trade, I would have been BE'd here, right there. So unfortunately, it didn't drop all the way down to that sell side we're looking for, downside of that 15-minute discount array, out of the reclaimed. Very difficult profile, I think, today to be trading off of. Ooh. But I was even in a 1 hour gap. I'm trying to see, what do we target? We ran back into the 1 hour gap. It's not even a 1 hour gap there. 4 hour reclaimed here. They're forming the BPR. The 15-minute chart, what do we got? Yeah, no time-based liquidity. We ran out. We went from IRL and premium to IRL and discount. Bro. Hey, you need to be put in jail, Slander. Anyways, so it's approaching 11 o'clock. We got last ditch macro here, but I'm uninterested in price. And overall, I think a good learning lesson for the price action today. We got this nice drop at 9:30. Kind of decent entries in here. Hard to trust though, for sure. Nice run up during the macro time, give you a entry there. And then dropping back into the discount PD array, which is unfortunate, just very messy PA, I think. You know, this is one of those days where it does move, but it's not clean, nor is the bias outstanding coming into the morning. I was sketched out about the bias. And in terms of target as well, it's not reaching that target in terms of price that we want to see. Not even so much about the time, don't even focus on that. It's price-wise, it's hard. So if you took a loss today, even if you took a win, if you found no trade, much to learn from a day like today. We may do a mark review later. Or I'll just leave it up to you guys. You guys just do a mark review for yourself. And I still think for the rest of the PM session and lunch, we'll probably come back into this sell side if we stay consolidating, then tomorrow is going to be a little bit of a better move. Would LH be considered ERL versus IRL? So then LH be considered ERL versus IRL. So then we. Oh. Oh, but we never took London High, right? We never took London High. We took out the external range here at Asian, which counts, I guess. But then if you look at if that's a daily high, we should be dropping into some sort of daily discount array, which within the dealing range between this stop run here, this becomes the dealing range between this high and this high. It would have stopped in here. I would have liked if it stopped in there. It doesn't need to come back all the way down to the 4-hour discount PD array. So technically, I guess it does go from external range premium down to internal range discount, but it's very, very weird. So especially for the session, like I guess even for the session, it's like this in here is balanced price range, right? Black candles, up candles. BPR, this should be used as breakaway. This should be used as breakaway. That's why I find it very weird. It's dropping to this in here. Let's turn off that. This should be a breakaway gap if we're bullish, right? If we're bullish, breakaway gap, this also should be a breakaway gap. It should not need to drop all the way back into here and then come back up. I find that very weird. It's more likely that it's going to go down for the sell side. The fact that we have the 4-hour balanced price range is dropping through these discount PD rates with displacement. It's likely to go down for this low. Now, that's why I said it's kind of weird that it's stopping in these tracks and it's retracing a great deal. Then it may come back down and sweep the sell side later. Overall, just a difficult profile for the day. Do you think that the price will take the old high on the daily? I genuinely believe that all-time highs is the target for the rest of summer. And we complete this market maker model. But like I said, this premium array up here is probably going to create some retracement either into the bisi or to the sell side here. But what can you do? What can you do, right? So tons to learn for me as well. From a day like today, how can we avoid things like this, or maybe just take partials on the way down? And now, those partials on the way down don't look so bad. But even after that, it's very hard for me to say those were good if I were to take partials on the way down, because I don't see any reasonable PD rate to be taking it off on. 15-minute breakaway gaps are not something I target, especially given we did not take out some substantial buy side previous day or anything, right? It was like current day Asian high. Do we look at that as a really good time-based ERL? Not really. It's qualified as one, but it's very low on the list of tier rankings for ERL. So it meets the requirements, but it's the precision of it is maybe like 30% of what we normally see, right? Compare that to a day like Tuesday. Tuesday is very clear of what it's doing, and very, very much more easy to trade. So even if it didn't take the loss today, I would have been break even, 100%, or even maybe slightly in profit if I trimmed it to maybe like this high. But yeah, it would not have been the 9R trade I would have looked for. So all good, right? Take care, Scrappy. Heard someone describe this as a news market, not a traditional liquidity market. Why are we? Right. I mean, which would make sense, right? It's just, it almost looks to me we're coming back to the start, right? Like we basically just, that news at NVIDIA popped us up, filled the gap, and then now it's just using this entire day to just reset us back to where we were going into the close. I think you're right. But hindsight 2020 kind of thing. I was using RTH and new week opening gap, easy to be greedy from my perspective and look for the low. Yeah. Like a version of time distortion. Right. Just kind of a reset. So just instead of it just skipping like this entire range. I like that. Is that the true thing? I don't know. But I think that's a reasonable explanation for today. What time frame did you use to see the setup? A combination of the 1 minute and the 15-second chart. We had 1 minute SMT at the highs with the macro time right there between this high and this high. SMT. We had originally It traded up into that SMT, and then it dropped down, displaced through on 15-second chart. A swing low here, also this high, low, higher high that took out the buy side. So this I looked at as a breaker, traded back up into the breaker there with the inefficiency, and then as it sold off here, I've marketed in, or actually had a limit order on that change of state delivery. So I got in as soon as it took that low out. My stop with then was at the retracement high. It was slightly in profit here, but then it came back up, stopped me out, and then run back down to my direction of draw, but not to my draw. All right, so what could I have done better? Waited either for the 1 minute setup and just gotten in there, or even if I wanted to get in using that SISD, I should have placed my stop at the SMT protected high instead. Also on the 1 minute, we had no true change in state delivery, nor an inversion fair value gap, nor a SISD, right? So this gap was not displaced through. So therefore, I shouldn't have been looking for a 15-second setup. I should have waited for either the 1 minute gap here as it traded up into premium, and if Phoenix is still in here, that's your model right there, that 1002. We're tracing back into premium of the range before 1010 on an 8:30 news day during the macro time, right? There's no breaker present, so we don't use the breaker, but this is the one you want to be annotating for the model. So I could have used that today, and maybe we should have liked that. Or if I wanted to get in the 15-second chart, I should have waited for some sort of confirmation through the 1 minute PD race. So maybe getting in off of this change of state delivery here and placing my stop there. So stuff I could fix for today. But all that being said, even if I got in a better entry and I didn't get stopped out, I would have been break even or slightly profitable off of a trim to here to this swing high after it was SMT protected, or even maybe to the breakaway gap. So it would have been like, you know, like 30 points worth of profit, 40 points worth of profit. Yeah, exactly. I'm with you there. I value the same thing, order flow over structure. It's a combination of both, of course, but yeah, order flow is just telling me, okay, if it's weaker than I expect or stronger than I expect, I can get in on those PD rays compared to structure wise, right? Sorry, you're not using the 15-minute, 1 hour, 4. I am for my analysis in the higher time frame. This trade in the 1 minute and the 15-second is based on those. Where I'm not just using a 1 minute PD array. So it's based on the fact that 15-minute, 1 hour, 4 hour, the analysis there, which I provided into daily bias. But my entry is on sub 1 minute time frames. I do not enter on 15-minute or higher time frames than even than the 5 minute. The 5 minute is really the maximum time frame that I'll use, which is probably weird for some, but I'm more session based than swing trader, so that's my preference for entry. All right, I don't want to keep you guys for too long. I know we're just kind of meandering around in this range, so I would still look for the sell side here and the sell side down here to be targets for the day. When we hit that is really up to the market, and like Maddie said, this could just be a news market instead, where we had to come back and reset the news from pre-market, and now we're stuck within the range. All right, so plenty of to learn from today. I suggest, if I don't do a market review, that you do one yourself. Go back in, delete everything off the chart, and re-annotate it the way that it happened perfectly. Perfect hindsight. If you need a demonstration of what that looks like, go back into the YouTube vids section and you will find a video labeled the Q&A backtesting from March 26th. That video right there, I'll forward it over to you, has a walkthrough, about a 4-minute walkthrough of how to mark something up with perfect hindsight. So if you're struggling there, Slander just sent it as well. You'll find that available. All right, so I'll post this recording up later. Yeah, template. Can I share a template? How do I share a template? Oh, is it this? Oh, sharing, copy link. There you go. So I'll put this upload later on today. Plenty to learn from, as I said. So take care today. Hopefully we'll have a stream tomorrow. If not, I will see you guys on the weekend. All right, so do the things that are necessary to succeed. Journal, review today. I'll talk to you soon. Peace.